Hello everyone, in today's video we're going to be discussing what volume profile is, why it's important, and how we can use it to formulate trade ideas, whether it be an entry or an exit or managing a position. So the first thing that we'll go over with volume profile is what it is and how to get it on your charts. On a standard chart, if you've never dealt with volume profile before, but obviously volume, you're most likely used to having volume expressed based on time. So this is a 15-minute chart. We can see here that this is the open. There's a lot of volume. And then in the overnight session, very little volume, next day opening. That's typically how you're probably used to seeing volume. And it's good to see it that way. I think it's relevant, especially with scalpers, trading off of lower time frames, a minute bar. You'll get to know what is a standard volume for your market when it's slow and also when it's fast and there's a lot of volume and a lot of activity. So now volume profile. A volume profile expresses volume based on price over a certain period of time. So there's a few ways that you can get volume profile on your chart. This specifically is Optimus Flow. If you're working with TradingView or another platform, just search up volume profile and there's going to be a tutorial on it. With Optimus Flow, on the different types of time frames that I have for my charts, I always have a volume profile on the left or the right at a minimum. On some charts, I have them on both sides. And we'll get into that reasoning here in a second. But with Optimus Flow, you have to activate the volume analysis toolbar, come down here to the left profile or the right profile, enable it. And on this hourly chart on the left, I have the previous week's volume profile. And on the right, I have the current week's volume profile. So that's how to get volume profile on your charts. That's what it is. Next, I want to go into why volume profile is important. So the market establishes fair value. And when we talk about fair value, that is meaning that the market is typically in agreement with where price is at that time. Fair value is usually shown by these high volume nodes on the volume profile. That means that there's a lot of volume in this area, a lot of traders being involved, and a lot of transactions. When the market moves to another value area, typically it will move quickly to another value area to establish a new value, and it will move quickly to the next area. So we can see here, this is again last week's volume profile. When price came down, it was establishing volume in certain areas. So again, this is the way up, this is the beginning of the week, and then the way down. So down here, we have some volume. This curve right here, low volume node, and then this volume area. But when we rallied up to this new value area, there was a lot more volume being traded up here. And then we came down. Obviously, we gapped down over last weekend and came back into, or at the very bottom of this entire range. But the reason it's important from a trading standpoint is because we need to know where the high volume nodes are and the low volume nodes are to know where the most traders are and the most volume has been transacted. We can use that to formulate trade ideas. So for instance, in our technical analysis thesis for this week, we had some clear upside targets. One was here that I've removed at 61.40. The next one was 61.54, and so on. So I'm using technical analysis to identify potential trade setups. And then in addition to that, I'm looking at the volume profile to reinforce those ideas or validate an entry or an exit. So if our thesis was this week, it's going to try to close this gap. And if there's strength in the market, it's going to test these upper targets. And This volume profile right here is from Wednesday the 27th. No, that's on the 15th. Wednesday the 28th, I believe that's correct. Tuesday the 28th. So we had this volume profile, and this was the value area between, or the upper side of it was 60.86, lower was 60.62. So we were in this range and we started to break out. And what happened is that price broke out, came to retest it right at that value area, pushed up in the overnight section, came down again, and we started to trade below it. And this is the open, obviously, so it's a little bit more volatile. But when we pushed up and failed, and we came back down to this value area and broke back into it all the way through, the reason that typically happens is because if there are breakout traders from this value area, they're going to put their stops down here. So when price comes down into it, if there's not enough buyers to absorb that liquidity, stops will get triggered, and it will be a cascade of stops looking for liquidity to the downside. And again, since this was a value area, when price moves out of a value area, it has to have enough momentum to move to a new value area. So we traded all the way down through it, came back up, and then we started to have this nice upward trend before a push up, and then obvious fail today on Friday. On the hourly chart, again, this is last week's volume profile, there's these high volume nodes. So we can see here that at this level here, price came up to touch it, came back down, came up to touch it again, and was kind of consolidating. And as soon as there was enough buying momentum, price went to the opposite side of this value area. And that's, well, actually it went much higher than that, all the way up here to this low volume node. Now, the reason it potentially had difficulty getting into this other value area is because it's the edge of it, and there wasn't enough momentum to push it all the way through. In essence, there were sellers here, and there was a lack of buyers because they didn't believe that price should be priced into this upper value area. And again, this is just, this is a high volume node, but the point of control is right here. This is the big volume right here. So we pushed up through it to the low volume node, came back down, again, went all the way through it to here. And then that's when price really started to fail and broke back down all the way into this area. So now we have price down here. We can go to a longer term chart and develop ideas for next week. So if this momentum continues to the downside, where's our volume going to be? This is a big value area. So price might have difficulty getting into this area right here, right here. So we're going to mark a level right there. So now we can say, if price continues to come down, especially on the first touch, most likely there is going to be some form of profit taking from sellers. So there's going to be buying there. There might be a little bit of a retrace. And obviously, if it does continue down, then we're looking at levels below that. But this would be your first level to say, okay, if I'm short, this is a good target, not only because I think price can get there, but it's also a good target because I believe there's going to be a reaction to the upside in the form of profit taking, and we want to maximize our profits in any position. So that's how we use volume profile to look at the high volume nodes, the low volume nodes, to really formulate trading ideas and theses about what we're going to do the next day, the next week, and so on. If I missed anything, put it in the comments. I'll address it. But I hope that helps, and we will see you next time.